Fine. I think let's get started then. So good evening, everyone. We're delighted to be joined this evening by Dayan Posen, the Director of Based-In Operations for the Federation Based-In. Just want to start off by thanking the Dayan for stepping in at short notice. We had Rabbi Schiff penciled in for this evening, but unfortunately his mother was nitto last week, and Dayan Posen kindly agreed to do this year at very short notice, so thank you very much for that. Dayan Posen has also said that he's willing to take questions during the share. How best would Dayan want people to do that? Just come off mute at any point, or
no? They can just go off mute and ask. It's fine.
Okay, perfect, great. Okay, well, without further ado, I'll hand over to the Dayan.
Thank you. Good evening. Firstly, all of our wishes to Reb Naftali Schiff. Mitzvah Hashem, if he has to miss future shurim, it should be for good reasons. Simchas Mitzvah Hashem. The subject which I'd like to discuss tonight is a very, very large subject, and I'm not going to go through all of the different areas and angles of it. I'd like to touch on some of the more common scenarios that you come across. It's the halacha of Ribbis. Ribbis is a interesting area of halacha from the point of view that the Gemara and Chazal treat it very firmly, very strictly. A person who lends with Ribbis, a person who borrows with Ribbis, with interest. And yet, in the world that we live in, the world of commerce and the world of finance, it's an everyday situation. If a person needs to borrow money, it's understood that they're going to have to pay for that money. People are entering such a situation with both parties voluntarily agreeing to what this arrangement is. So, for example, as opposed to Hilchos Geneva, the halacha is referring to theft. Where if a person steals from you, you haven't agreed to them taking the item. They've taken your item without permission. They're a gunner, they're a robber. There, everyone understands that it's immoral and it's incorrect, and the person has your money in their possession and they have to return it. When it comes to interest, on the other hand, for example, you might have a situation where I can't get a mortgage from a bank, or I need to borrow £5,000, and someone's prepared to lend it to me at 1%. Anywhere else I'll go, it might cost me 2 or 3, 4, 5%. That person's doing me a big favor. I'm happy to pay the 1%. They're happy to take the 1%. Both parties are entering into an agreement voluntarily. No one's being coerced into it. No one's being forced into it. And yet the Torah treats it in a similar regard to theft, from the point of view that if I borrow £1,000 and we agree up front, I'm going to pay back 1% interest, then that is Ribbis Deraisa. It's Issa Deraisa. It's in fact a number of different Isurim Deraisa, which there's an Issa on me, there's an Issa on the person who's lending the money. And the interest which I've paid, if I go ahead and pay it, in fact, he has to return it to me. He has to return back the interest. So Chazal treats it very, very strictly. The shaila is, in what scenarios does it occur, and when does it apply in a modern day world? Now, what's apparent in Hilchos Halva and in Hilchos Ribbis is that not always when something is called a loan is it necessarily a loan, and not always when something is called an investment is it necessarily an investment. And we need to understand what is a loan and what's an investment. Before we can understand what's a loan and what's an investment, we need to differentiate between two different types of loan. In English, we use the terminology, I lent to you, or I'm lending to you, in two different scenarios, which the halacha gives different terminology to. So let me give an example. If I lend you £100, I'm lending you £100. The Torah's terminology for that is halva. It's a loan. If I lend you my bike, in English we would use the same terminology, lending. In halacha, that's not called a halva. In halacha, that's called a she'ela. Both we would translate as lending. But there's a fundamental difference between the two. What's the difference? The difference is, halva is where you lend an item which is going to be used up, or the person who you're lending it to has the right to use it up and to replace it with a like-for-like item, which will always be the case when you're lending money. And it doesn't have to be restricted to money. It could apply if somebody borrows from you a bag of sugar, right? A challah, anything that can be used up and replaced with like for like is called halva. She'ela, on the other hand, is where you're using an item and you're giving back the same item which you received, not like for like, the actual item you received. So for example, you lend somebody your bike, they're using your bike, they return the bike, it's your original bike. They haven't replaced it with another like for like bike, they're giving you back your original. Now, why do we care about this distinction between halva and she'ela? Well, there's a very good reason. When the Torah turns around and forbids the paying and the receiving of interest, it only forbids it on a halva, not on a she'ela. So it only forbids it on something where you're using it up and replacing it with a like for like. So the classic example would obviously be money. If you lend money to someone, that's going to be a halva, because they're going to use up the money. You're not allowed to return it with more money than that which you borrowed. She'ela, on the other hand, if you lend somebody your bike and they return it and they give it back to you with a box of chocolates, is that a problem of ribbis? It's not a problem of ribbis. Why? Because that was not a halva, that was she'ela. That was she'ela where you were using the actual item which you're going to return. You're not using it up, you're using it. In fact, there's a terminology for such a scenario where you pay someone for she'ela, and that's called schirus. That's called rental. If you pay someone for using their bike, then you're not borrowing their bike, you're renting their bike, so to speak. And that's not a problem at all. So just by way of introduction, when the Torah forbids ribbis on both the borrower and the lender, it is forbidding it only in a scenario of halva. Just to prove the point, somebody asked a shaila, what happens in a case where you've got a friend or family member who, not an immediate family, let's say you've got a sibling or someone who's got a car and they're going away on the holiday, they're not using your car. So you ask them if you can borrow their car, and they say no problem. And they give you the car with with half a tank of petrol. And you borrow the car, you use it for a few weeks while they're away, and when you come to give it back, you remember that you got it with half a tank of petrol, so you can't give it back on empty. So you want to fill it up. So do you fill it up on half, or do you fill it up full? You fill it up full, and you give them back the car. Is that a problem of ribbis? Now, let's just see if everyone's awake. Is that a problem of ribbis? Simon, you can't answer this. You've heard this before.
Did you say she'ela?
Sorry?
You said it was like she'ela, so it's not.
Go on, elaborate. I can't see who I'm talking to, but yes.
Sorry, it's Benji. You're lending the car, you're getting back the identical car just because it's got extra fill-up in it.
Right.
Anyway, that's my view.
So actually, in this particular shaila, there's two different things going on simultaneously. There's halva and there's she'ela. The car is halva. You're borrowing the car and hopefully you're giving back the actual car which you borrowed. You're not replacing with it for like. However, you're receiving half a tank of petrol, which you're replacing with, let's say, half a tank of petrol before you top it up more. So in that case, there's a halva as well. There's a halva on the petrol and she'ela on the car. And now you want to give something extra, which is the extra half a tank. So the question is that problem of ribbis? Because do we look at that as being an addition to the halva, or do we look at that as giving a gift for the she'ela? And on this, the Sefer Minchas Ribbis paskins, and I think you'll all agree, that the nature of somebody who tops up a car is out of gratitude for borrowing the car, not out of gratitude for receiving half a tank of petrol. And therefore, in that case, it's not a problem of ribbis, because what you're giving extra for is for the she'ela and not the halva. So that's just by way of introduction to bring out what we're talking about regarding she'ela or halva. So we're talking about halva. Now, halva comes in lots of different shapes and sizes where one might not necessarily recognize it for what it is. So let me give an example of a case which is extremely common. Anyone here who is involved in renting a property, whether they're renting it themselves or whether they have a property which they rent out, or whether they've got children who rent properties, that standard in any rental contract is an interest clause for late payment. Right? It will be there even if you're renting a property off a from person. Chances are high that there's an interest clause in there for the simple reason that the person who prepared their paperwork, might not pass that past them, They might have just downloaded a normal rental contract on off the web. No one stopped to read through all the small print on it, and no one actually realizes necessarily that there will be an interest clause. The interest clause says if you pay your rent late, then there's an interest charge. That's a problem of Ribbis. And in fact, even having the contract is a problem, because you're having a contract which has in it a clause, which is an interest clause, and that itself is a problem. Now, there are various different solutions to a lot of these problems. We're not going to necessarily go into all of them now. We'll see how much we get through, and then we'll see what we can go into. But first, I'm just red flagging some of the different areas where these problems can arise. Now, one of the more common areas where this situation arises is when you have a situation where, let's say, a child, married child, wants to purchase their first property, their first home. Now, sometimes they themselves can't get a mortgage, or they can't get a mortgage. It's too complicated for them to get a mortgage, or let's say they don't get a mortgage, but their parents. So the different ways how this situation sometimes plays itself out. Sometimes the parents take out a mortgage on their property and lend the money to their children so that their children can buy a property. Sometimes the parents purchase the actual property for their children, but the parents purchase it in their own name, and they're holding on trust for their children, and they take out a mortgage. And whichever scenario it is, the reason why people don't instantly realize there's a Ribbis problem, even people who normally might be looking out for the possibility of a Ribbis problem or an interest situation, is because the parents view it that they are just borrowing on behalf of their children. So imagine that parents have an overdraft facility. It could be a simple scenario. Imagine that you've got kids who want to go on holiday. They need £5,000. You've got an overdraft facility, so you borrow £5,000 for them. And in your mind, you're borrowing it for them, and they're paying back the bank either direct or through you with the interest. Is that a problem or not a problem? Sorry, you're all muted. So if you want to answer, you have to go off mute. Anyone have an opinion? Emmanuel, your rule's out as well.
Presumably, you're legally borrowing it off your parents, and therefore there would be a problem with Ribbis.
Correct. Presumably, not just legally, halachically as well, because there's two separate loans going on. The bank is lending to the parents. The bank have no recourse from the children whatsoever. They're lending the parents, and the parents in turn are lending their children the funds. And whether or not the children pay the money back directly to the bank or not is irrelevant. It's a red herring. But the actual reality is that there's two separate loans going on. And here's the remarkable fact, the remarkable halacha. Even though the parents are not having any personal gain themselves, because all the money that they're receiving from the children is going straight to pay the bank's charges, the interest which is being levied by the bank. So the parents are not gaining from this. On the contrary, they're doing a favor for their children. They have no net gain. All the money that they receive, the capital and interest, goes straight to the bank. What should be the problem? However, the problem is that, as we mentioned, there's two separate transactions going on. They are borrowing with interest, and they're lending on with interest. And even though when they lend it on, they're lending on for exactly the same amount of interest that the bank charges them, or maybe even if they do it with less, it wouldn't make a difference. When they lend their children money, they're not allowed to charge their children any interest whatsoever. And the same shaila would apply if, for example, you're buying something for someone on your credit card, and that invokes a charge. So there isn't always an interest charge straight away. Sometimes it only comes after a period of time if the bill hasn't been paid. But that interest charge cannot be passed on to the person that you used your card for, which sounds extreme because you're not gaining at all from it, but that's the halacha. Now, in the case of the property, since the parents are borrowing against their property, or maybe even purchasing a property on behalf of their children, but they're the ones taking out the loan with presumably a personal guarantee, unless they're buying it in a company, but presumably a personal guarantee. In that case, the halacha is, the way that the halacha looks at it is, the bank is lending the parent. The parent is in turn lending the child to purchase the property. Now, sometimes when I discussed the Shai in the past, members of the audience have asked, well, the parents are not lending the children any money. To which I asked, well, if the children would have the property sold, would they be obliged to make sure the mortgage gets paid? Of course they would. I mean, practically speaking, you wouldn't be able to sell the property without the mortgage getting paid because the bank would have a charge. But the bottom line is, even though the parents agree they're holding this property for their children on trust, but the mortgages have to get paid, even though it's not the children's mortgage. And the reason for that is because the parents have borrowed against their children's house, so to speak, in that scenario, and the money is owed by the children to the parents for the money which is still outstanding to the bank. So in that situation, every month's interest payment that's made by the children, the parents will be over 6 different lavim, and the children will be over 3. So we're dealing with quite serious stuff. Has everyone understood this scenario before I move on? I assume I'll take the silence to be a yes. Okay. Now, what's the solution? What's the solution for such a situation? Or let me give you a different situation. Similar, but also very common. What happens if you have 2 partners who have a partnership together, or maybe even a company together? And I'll give you 2 different scenarios, both of which are common. Scenario number 1 is that the partnership or the company needs to borrow money. They need to borrow £10,000. In scenario number 1, Reuven, partner number 1, lends from his own personal funds money to the company. And obviously the company is going to pay him the interest, which otherwise he'd be able to get for it in the bank, or maybe even more. Now, in that situation, they might be doing the company a favor, because the company could be, if they would have borrowed from the bank, it would have cost more, and now they're borrowing from Reuven, they're paying less. It's a win-win all round. But it's still a problem of Ribbis, because at the end of the day, if you think about it, if it's a partnership, so every pound that he's lending to the partnership, he's lending 50 pence to himself and 50 pence to his partner Shimon. And he's charging, you can charge yourself interest all day long, there's no problem. If a person's got his own company and he has a private loan to that company and he wants to charge himself interest, no problem at all, because he owns both. But in this situation where he has a partner, Shimon, so he's charging his partner half the interest, that's a problem. The same in the reverse. What would happen if a company has an overdraft facility? They've got the ability to borrow. And Reuven's making a wedding, and he needs the funds. So he asks his partner, Shimon, are you okay with me borrowing this money? And Shimon says, yeah, you can borrow. Sorry, excuse me. Sorry. He says, yeah, you can borrow. And he borrows the money from the company, and he pays the interest. Now, who's actually borrowed? The partners are borrowed. So if it's a partnership where they're both personally liable, they're both borrowed, and his partner has lent on half the money, so to speak, to him. In a situation where it's a company and the company has borrowed, and then the company has lent on to him, this comes onto a different, larger shaila. And that is how to understand a company and the workings of a company from a halachic perspective. Now, this shaila has a number of different angles to it, most of which are beyond the remit of tonight's share. But let's just speak in broad terms. In broad terms, even though from a legal point of view, a company is a separate legal entity. A company is not the sum total of its shareholders, certainly not the sum total of its directors. A company is a separate entity. You can have shares in it, but it exists as a separate entity. From a halachic point of view, the halacha does not recognize a company as being a separate entity from that specific point. So let me explain what that means. If you would understand that a company is a separate entity entirely, so then you might turn around and say, am I allowed to have my company open on Shabbos? If a company is not me, if a company is not a Jewish person, it's an entity. It's something that's been created, it's a legal concept. So it's a separate entity. I should be able to have my company open on Shabbos. I should be able to have my company owning chometz because it's not me. And the halacha, of course, is most of the poskim paskin, 99% of the poskim paskin, that we do not recognize the company as being a separate legal entity from the point of view of Shabbos, from the point of view of chometz. A person cannot have their company open and running on Shabbos. We're talking about a company that's owned entirely by Jewish people. You cannot have it open and running on Shabbos. You cannot have your company owning chometz. So, if that's the case, what happens to the limited liability aspect of a company? Do we recognize the limited liability of a company? Now, this is a very interesting point. If I borrow money, let's say I have a shop, and my shop is a limited company, and my shop is buying goods, and therefore it's racking up debt, and it has creditors, and then chas v'shalom, at some point in time, that company goes bust. Is the owner of that company, is the owner of that shop personally liable to the creditors to pay back the money in halacha? What would you say? I hear someone's going to have to go off mute.
Presumably there's an implicit mechila of sorts. If it's done in the legal structure of a company, there's an understanding that in certain circumstances it wouldn't be paid back.
Right. So that is the halacha. The halacha is that when you trade with a limited company and you see LTD next to the company, what that means is that the company, your ability to claim is restricted to the assets of that company. And al das kain, with that in mind, you're trading with the company. You know that from the beginning. And therefore, your ability to claim is you're accepting from the beginning, you're, so to speak, waiving your rights to claim from anything more than the actual assets of the company. So that is the halacha when you're dealing with a limited company. That does not mean that the company is a separate limited entity in itself. That means that you're lending to a person, but your ability to claim is limited to the assets of the company. Reb Moshe Feinstein has a famous kula where he says, if you're lending to a limited company, right? So let's say you have a company and you ask me to lend you £1,000, but not you personally. You want me to lend the company, and I lend your company £1,000. Reb Moshe paskins, in that situation, there's no issa of ribbis. Why? Not because he views a company as being a separate entity, because Reb Moshe would definitely not allow your company to be open on Shabbos or to own chometz. But because Reb Moshe says that when you're lending a company, there's no shibud haguf, which means there's no personal charge on the person borrowing the money, because you're restricted to the assets of the company by the limited nature, as we just explained. In that situation, says Reb Moshe, that's not the situation which the Torah was talking about when it forbade lending with ribbis. The Torah is talking about when you lend someone money and he's personally liable to you for the money, that creates what's called a shibud haguf, which is effectively a lien on the person. That person is now indebted to you in a personal capacity. And that, says Reb Moshe, does not apply to a limited company. And therefore, if a person's lending a limited company, according to Reb Moshe, there is no problem with charging interest. However, having said that, if you're lending a person's limited company, but you also ask for a PG, for a personal guarantee, then of course that changes everything, because in such a situation, you are lending the person. The fact that the initial loan is to the company is a red herring if in fact the person, the owner of the company, is personally liable. And in that situation, even Reb Moshe would agree there's a problem. Second of all, if a limited company is lending an individual, right? Not an individual or a company lending a company, but where a limited company is lending an individual, where the person borrowing is an individual, then Reb Moshe absolutely agrees that there's a problem of ribbis, because the individual who you're lending has a shibud haguf. He's personally liable. So Reb Moshe's kula is only and specifically when you are lending to a limited company without any personal guarantee. Now, many poskim argue with Reb Moshe, and they hold that even when you're lending a limited company, the fact that you're accepting your ability to claim is restricted to the assets of the company doesn't necessarily mean that there's no shibud haguf. Could be there's a shibud haguf, but it's a limited shibud haguf. It's limited to certain assets. And Reb Shlomo Zalman Auerbach and many others argued with Moshe, and they held that one cannot lend to a limited company and charge interest to a limited company. I myself had the chance to speak to Reb David Feinstein, who is currently very ill in hospital in America. Reb David is the son of Reb Moshe Feinstein. And I was speaking to him regarding a different context, different shaila. And at the end, I had another minute still to speak to him. So I took the opportunity of asking him whether his father of Moshe, when he paskened this halacha, whether he meant it lechachila, does it mean ideally, or b'diavad if a person doesn't have a choice? And he told me himself that he smiled at me and he said, yeah, his father meant it lechachila. His father meant it 100% lechachila, that he held there was nothing wrong with lending and charging interest to a limited company. Now, here in England, I think most poskim do not follow the approach of Moshe on this particular halacha, and most poskim and most Batidinim hold you should not lend to a limited company and charge interest. You can lend to a limited company obviously without interest, but if you're going to charge interest, then you need to come up with a solution, which we're going to go into now, what the various solutions are. So before I move on, has anyone got any questions? Okay. It's either very clear or everyone's very tired.
I was going to ask one question, sorry, it's on mute.
Go on.
Where you talk about if a partner if in a company is lending his personal money to the company, to the partnership, sorry. So it's kind of as if he's lending partly to himself and partly to the other person. Can he, and maybe you'll cover this in the second half, but can he structure that in a way where it's only himself paying for the ribbis from the company back to himself, and that his other partner is lending the money at 0 interest?
So in theory, yes, he can. It might be a bit confusing from an accounting point of view, how you keep track of that. But in theory, yes, he can, but he would have to declare it up front to his partner. He could have it in a side email where really he's lending only against himself, not against his partner's share, or the interest upon him will only be charged from his own portion of the profits.
Right, okay, thank you.
Okay, now what does one do in these situations? Because these situations are fairly common. And I'll just give you one more one before we come on to some of the solutions. Another one, which is a very common scenario, is when you have a investment structure. Sometimes the investors, you might have a number of different investors. You might have the people running it to themselves, putting their own money, and they might need some finance from the bank, and they might need some further finance, whether it's mezzanine finance or whatever it might be. Now, in that situation, sometimes the other finance, which is often obtained from Jewish lending houses, and I'll just at this point make a observation. Many of the private banks out there are in fact Jewish, or have majority shareholding who are Jewish, or a strong minority shareholding who are Jewish, which can create various different ribbis, shilas and scenarios. But what happens if a person is borrowing from a private individual who's Jewish, and that individual, sorry, not borrowing. What happens if a person has an investor who's investing in a project, but they want what's called preferential return? Now, there are different ways how this can be structured. Could be a preferential share, could be a preferential return. Sometimes it's structured in a way that their capital is secure. In other words, first, always the bank's capital will come first. On any investment, the bank will make sure they've got the first charge. What would happen if you have an investor who comes along and they want a preferential share, that their money will be received, their initial investment will be received back before the other party's money. So give me a practical example. Imagine if I have a property opportunity, I see a property going for £1 million, I believe that we could put 200,000 into it and the property will be worth 1.5. Right? So £300,000 return. Sounds amazing, perfect. I've got, let's say, so it's 1.2 it's going for. I've got 600,000 myself. I can get, let's say, forever. Let's say I've got 200,000 myself. I can get another 800,000 from the bank. I need another 200,000. So I come to you for that 200,000. And you say you're prepared to invest in this project. Right? You're not lending me the money. Right? You're not lending me the money and charging interest, because you know you're not allowed to do that. So what are you doing? You're investing in the project. And we're going to split the profits, let's say 50-50. Right? Because I'm putting in 200, you're putting in 200. But you want your capital secure that after the bank take out their 800, you're going to get your 200 next before I can take out a penny. So in that situation, you have effectively asked me that my 200,000 should be on the line for your money. So in other words, if Chas v'Shalom the property market collapses, and this property, before we get a chance to develop it, goes from 1.2 down to £1 million, the bank will come along and take the 800,000. You will take the next 200,000, and I will lose all my investment of 200,000. And that's the way the deal could be structured, and it's often structured like that. In that situation, the poskim view your money as effectively being, my money is effectively being security for your money. And this goes on to the opening line, which I said right at the beginning of the share, which is sometimes something is structured like a loan, but it's really an investment. And sometimes something's structured like an investment, and it's really a loan. How do you define a loan, and how do you define an investment? Anybody? Or if you let me narrow it down. What differentiates between a loan and an investment?
Normally the standard health warning that investments can go up can go down in value as well as up, I'd have thought. So you don't necessarily know you're going to get all your money back. And
a loan?
Whereas with the loan, you would, you'd be expecting to receive all your money back under whatever circumstances.
Right. So that is correct. A loan is going to be there's an obligation on the person borrowing the money to pay back the capital. It almost irrelevant to what happens. Now, just to put a caveat on that, if a person's lending a company, then it could be that you'll only have a right to claim from the assets in the company, not from the person himself. But as we discussed before, those persons who argue with Moshe will hold that doesn't matter. That's still called a loan. If there is the possibility, even if it's remote, but there's the possibility of losing your money, then it can be an investment. If there's no possibility of losing your money, so to speak, within this structure, then it can never be called an investment. An investment, the difference between an investment in halacha and a loan is that a loan is guaranteed and an investment has a potential risk factor. Right? Now, so come back to the scenario which we're discussing. In such a case where the property costs 1.2, we're getting 800 from the bank, I'm putting in 200 and I'm coming to you to put in 200. I'm going to run it. And I might be charging for running it, that's irrelevant. In such a situation, if you ask for a preferential return or preferential share, let's say on your capital, which means that after the bank take out the 800,000, you have to get every penny of your 200,000 before I can take out any of my money. In that situation, if you don't hold like the Moshe, because if you hold like the Moshe, there's no personal guarantee here in any case. But if you don't hold like the Moshe, then the halacha will be that it's also because we look at it as a loan. Because effectively, my 200,000 is on the line for your 200,000. So my 200,000, I am underwriting your loan with my money. And that will be considered basically like a halva. Now, if you said that not only do you want the loan to be preferential, but you want the return to be preferential, which means that you want to get a 5% return on the money every year. And if it doesn't come this year, you want that figure to roll to next year. And you have to get your 5% back out before I can touch any of the profits. In such a situation, it could well even be Ribbis deraisa, where almost we look at it as if not only there's the capital being guaranteed, but almost the profits being guaranteed as well. And in such a case, it's awesome. So those are just a few of the common scenarios which occur in the business world and in the private world. So what's the solution? So Chazal instituted something called a heter iska. How many of you are familiar with Heta Iska? Do you know how it works? I'm going to ask you this rhetorically. I'm not going to actually make you explain. But if I would ask you to explain how it works, would you be able to explain how it works? And I asked that because, according to some poskim, if a person uses a Heta Iska and doesn't understand how it works, then it doesn't work, which is quite a scary thought, because anyone who's got a bank account in Eretz Yisrael uses a Heta Iska, whether they realize it or not, right? Because otherwise, how can an Israeli bank pay you interest, or how could they lend you money and you pay them interest, right? So they have to have a Heta Iska. You have to know, well, ideally know there's a Heta Iska, and ideally understand how it works. So let's understand. Spend a few minutes that we have understanding how a Heta Iska works and what the limitations of it are, because it's a Heta Iska. It's not a Heta Ribbis. It's not a magic wand that you wave and all of a sudden the Ribbis problem goes away. So, what is a Heta Iska and how does it work? Heta Iska is like this. Imagine, let's pick a scenario where I am doing this project. I find a property and I need, let's say, £100,000 from you. I don't have really any finance of my own. I'm the one who finds the properties. I'm going to manage the finance. I'm going to do all sorts of things with it. You come along and you invest, stroke lend £100,000. Chazal say, going back to the Gemara in Bava Metzia, that in those days it was understood that if you provide £100,000, it's understood that your intention is, now again, whether that's like this nowadays is a different question, but it's understood that your intention is that half the money is a loan and half the money is an investment. What's called in the Gemara, palga milva, palga pikodon. Half is an investment, half is a loan. What does that mean, half is an investment, half is a loan? That means effectively you're bringing £50,000 is your investment into the project. You're lending me the other £50,000, which I'm investing into the project. And we now have between us £100,000. If half of it's a loan, then what that means is, irrelevant of what happens to the project, even if Chas Shalom, the bank repossess the property, I'm going to have to pay you back the half, which is a loan. That's the Palga Milva. The Palga Pikodon is your investment. And you stand to lose on that, like I stand to lose on the half which I'm borrowing and subsequently investing back into the project. Now, you are allowed to receive a return on the half which is an investment, like any investor. You're like a partner. On the half which is a loan, you can't actually receive a return. And we'll come on to that, why that's relevant soon. So now, in a normal investment, if you would give me £100,000 without any paperwork, without any conditions or preconditions, you're just investing into this project, you trust me, you know me, everything's fine. What happens if, and in my experience, this is often what happens when Jewish people are very optimistic, and when they go into deals, they go into it with intention that they're going to make lots of money, and the main challenge is how they're going to spend that money. Right? Very rarely are people thinking about what happens if things go wrong, who's actually going to be liable, what's going to happen. But what happens if Chas v'shalom something goes wrong? And I turn around and I say to you, I'm really sorry, but there's no profit this year. COVID, Brexit, we didn't make any money this year. On the surface, unless you stipulated otherwise up front at the beginning of the investment, you're obliged to take my word for it, because we never said anything more than that. There was no higher barrier that I had to fulfill or cross in order to prove my statement. What happens one step worse? What happens if I turn around and say, unfortunately, this was a property which primarily was an area of students. It was meant to be rented out to students. There were no students because universities were closed. It couldn't get tenanted. Meanwhile, there was a mortgage to pay. The bank came along and they repossessed. And therefore, your money's lost. On the surface, unless we stipulated something else up front, you have to take my word for it. What happens if you say up front, nothing personal, I don't like to mix business with pleasure, I'm not prepared to believe you at face value, that you just turn around and say, that you have the right to turn around and say, by the way, sorry, no profit, or by the way, worse, sorry, your capital's been lost. You can say as an investor that you're only prepared to believe me that the capital has been lost if I can provide 2 kosher witnesses who can testify that the capital was lost. Now, kosher witnesses means 2 men, 2 Jewish men who are not related to each other, who are not related to either party, not as blood relatives, and not as close friends or employees of either party. Now, the reality of actually having 2 kosher edim, 2 kosher witnesses who can testify that the capital has been lost is very, very remote. And you can stipulate that if I don't provide these 2 kosher witnesses, then I'm obliged to pay you back the 100,000 no matter what I'm claiming happened. And that will be fine, because those are the terms of investment. Furthermore, you can stipulate up front that if I turn around and tell you that there was less profit or no profit generated, you're not obliged to believe me and take my word for it. And unless I can make a shvur, unless I can make an oath swearing to what profit was made, what profit wasn't made, then you're not obliged to believe me. You don't have to follow my word. Now, in that situation, that is effectively what a heter iska is. A heter iska is where, in the loan stroke investment contract, it is decided and stipulated upfront that I'm not obliged to believe you that the profit that you're saying is the profit that there was, or the lack of profit is the lack of profit that there was. And I'm not obliged to believe you that the capital that you're saying might have been lost was actually lost. And therefore, I will be obliged to pay you back the capital if I don't have the edim. And if I don't want to make a shvur, then I'm going to have to pay you an agreed percentage which the parties deem as fair. And that will be the percentage which is written in the heter iska at the beginning. So that, in a nutshell, is what constitutes a heter iska. A heter iska is an investment agreement where the investor has stipulated that he's not obliged to believe the person receiving the funds that the funds have been lost unless he provides edim. And if he doesn't want to provide edim, he will not be believed and he'll be obliged to pay back the capital. Furthermore, it says that as far as the return is concerned, the investor is not obliged to believe the recipient what profits were or weren't made. And if an agreed percentage, which both parties think is fair, is paid, then the recipient is exempt from making the shvur regarding if any further additional profits were generated or not. So what a heter iska effectively is it limits the area of exposure of the investor. It makes it that the window that the recipient has for getting out of paying is much, much smaller than in a normal investment. A few minutes ago, I differentiated between an investment and a loan by telling you that an investment has to have an element of risk. If there's no risk at all, it's a loan. What we've done now with the heter iska is we've very much narrowed the margin of risk that is involved in an investment, but there still has to be a small margin of risk. Now, so far, is this clear? Don't all say yes at once.
Yes to me.
Okay. So let's discuss some of the limitations of a heter iska. Heter iska has to be real. What does that mean, real? That means that the investor is saying, I'm not obliged to believe you that the money is gone. And if you don't have edim, you're going to have to pay me back the capital. Now, what happens if, for example, you've got 2 partners working in a firm, and one of them is lending money to the firm, personal money to the firm, and now he's heard in a share that it's not so straightforward to charge interest to the firm which you're part of, because when you're lending your own personal money to the firm, you're lending yourself and you're lending your partner. And if your interest is to charge, excuse the pun, if you intend to charge both the company interest, that's going to be a problem. So no problem, because I've been to Shion Ribbis and we had a perfect solution, Heta Iska. So I'll sign a Heta Iska between me and the company, and everything should be fine. Will that work? Anybody? I'm not giving up on audience participation, even at this late stage of the show.
Presumably, you could still set it up in a way where you have a loss, or where you're exposed to a loss.
Right.
So then you have your margin of risk.
What justification is there for taking a monthly interest payment? What are you saying when you take a monthly interest payment? Effectively,
That
you're saying, I don't believe you that you haven't made the return. So if you don't want to make a sure, pay me the monthly interest payment. Right?
Mm-hmm.
How can you say that when you work in that company side by side with your partner, and you know as much, if maybe even more than your partner, as to what's going on in the business?
Yeah.
Because you're wearing two hats. You're wearing the hat of the investor, and you're wearing the hat of the director stroke shareholder of the company which is being invested into. So if it's not real, if you can't say, I don't believe you, then for example, what would happen if, as unfortunately is the case at the moment with many companies, you are not making any profit right now? You will not be able, using the normal Heta Iska, to rack up interest charges at a time when you personally know no profits being generated. Right? So there's a limitation there. There is a way around it, which is beyond the time that we have tonight. But just by way of one example. By way of another example is historically, Heta Iskas used to be given out by Boti Dinim as a blank form of Heta Iska, where everything was filled in, all the text that I've stipulated was filled in, and the only thing that was missing was the amount, the names of the two parties, the amount which is being lent, and the interest rates which is expected in return in lieu of the shwur regarding the profits generated. And what happened? People turned around and they filled in their names, that part was fine. They filled in the amount, that part was fine. They filled in the interest that they wanted to get back. That was not fine. Why? Because sometimes people were putting, for example, 20% interest per annum into a Heta Iska. Now, if the Heta Iska is, as we just mentioned before, Palga Milva, Palga Pikodn, where half is an investment and half is a loan. Now, the reason to do it that way is because then the half which is a loan, you're guaranteed back. There's no risk on that at all. But the half which is an investment, which is what you're generating your return from, that's what entitles you to a return, only half is an investment. Which means, in reality, if you say, I don't believe you that you didn't make a profit, and therefore if you don't want to make a sure, pay me 20%, what you're really saying is 20% on 100,000 is actually 40% return on the 50,000, which is the investment. Now, really, you tell me which investor says, I don't believe you that you didn't make a 40% return. Now, there might be certain specific short-term deals out there. Sometimes you can buy a property, flip a property, whatever it might be. Sometimes there might be short-term, but most of us are not fortunate enough to know people who can generate on your behalf a 40% return on your money. And if you do, you keep it quiet, right? So therefore, to turn around and say, I don't believe you that you didn't make a 20% return, and therefore, pay me the 20%, it doesn't work, it doesn't make sense. And the problem was, they would go to Boti Dinim, sometimes even the Boti Dinim where they might have got the original Heta Iska from, with those blanks, and they'd go there for Din Torah, and they'd say, I want my capital and I want my interest, my return, my Iska as it's called. And the Bezdin would turn around and say, I'm sorry, this heter iska is not valid. And they say, what are you talking about? It's not valid. It was issued by your Bezdin or by your organization. And they'd say, yeah, but they didn't fill in the percentage. And when you filled in the percentage, you put a percentage which is too high. Now, in reality, if you wanted to get a 20% return, then you needed a different type of heter iska, which is kulei pikoden, where the entire investment is an investment and not only half of it. But the one that you used, which you probably didn't even realize at the time which one you're getting, is one which is palgam over palgam pikoden, which means that your 20% return is actually a 40% return, which is way, way above anything realistic. And in fact, 20% was also too high. Historically, the percentage which was accepted by the Bate Dinim used to be 15%. Now, what is the correct figure today is a very good question, because interest rates have plummeted, and some people in short-term finance might be able to get higher percentages, and there are certain specific areas of commerce where one can still get higher percentages. But it would be a good question, what percentage would be acceptable nowadays that people could realistically say, I don't believe that you didn't make that return. Again, possibly depending on the nature of the business. So that is just, again, another limitation on a heter iska, is it's got to make sense. It's not just like a magic wand, sign it, everyone, and now we can carry on business as usual. Very often, when parties are involved in a business transaction and there's a Ribbis angle, very often people make a call. People will call up to ask a shaila, is this a problem? Those people who do normally do at the last minute, right? They might have spent months talking it through with their lawyers and months talking it through with their accountants, and almost as an afterthought, by the way, is this a problem? Which, okay, that's the reality. Most people, when they're at work, short of making brachos and eating kosher, and making sure they're not in the office on Shabbos, they're not thinking that much about halachas, because normally they think it's not really going to be that relevant. But unfortunately it is, or fortunately, either way, it's relevant. And often people call up with a shaila, and when they discover that it's a problem, so we say, no problem, we can do a heter iska. And at this stage, the problem is a heter iska has to be a binding document over the entire deal. So ideally, the heter iska needs to be cross-referenced in the contract. The contract's got to say that this loan or this agreement is governed by the terms and conditions of the heter iska signed between the two parties. And the parties obviously have to go and sign a heter iska. The trouble is, often the parties will be reluctant, or their lawyers will be reluctant to change the document which they've spent so long drafting by bringing in a whole new contract which they might not like, might not understand, etc. Now, normally tough, we still say that ideally that should be in and that should be referenced. If it isn't cross-referenced, then at the very least, there's got to be a side letter saying, even though it's not in the contract, but everything we've done is according to the terms of this heter iska, and the heter iska has to be signed first, in advance of the original contract. Now, sometimes in a contract, there's a clause called an everything clause, which effectively says that all the points discussed and agreed between the parties is in this contract, and anything not in this contract is not part of this contract. And the reason that clause is there is because otherwise sometimes people turn around afterwards and say, along the way, during the negotiations, I said this, and you said that, and you agreed to the other, and that's where things go wrong. So this clause says, forget anything that's been decided. Whatever's in the contract is in the contract. Whatever's not in the contract hasn't been agreed. Now, in that situation, it's going to be a little bit of a problem to have a heter iska signed beforehand, because it's not in the contract. If it's not cross-referenced, it could be a real challenge, and one has to discuss at the time the best way to do it. But sometimes, I've discussed with lawyers where the lawyers have been reluctant to put into the contract. I remember one specific occasion where I said to the lawyer, okay, it's not a problem, but I need you to send me an undertaking, a commitment on behalf of your client, that your client fully understands that notwithstanding the fact that the heter iska is not in the agreement, the heter iska is the governing document over the agreement, and if there's any dispute between the agreement and the heter iska, then the heter iska will override the document. And the lawyer turns around the next day when he got the email and he said, I can't write what you're asking me to write. I mean, what you're asking me to write really empowers the heter iska to actually take an effect over the whole deal. I can't do that. And the answer was yes, that's exactly what's being asked. Because if it doesn't override the whole deal, and it's just a side little document signed to keep the rabbis happy, but really it's got no validity whatsoever, and if this would go to court, they'd just look at the contract and they would not look at the Heter Iska, then it doesn't work. It's got to be real, it's got to make sense, the figures in it have to make sense, the involvement of the investor has to be minimal, so he doesn't have proper first-hand knowledge in the investment he's investing in, and then potentially, in many, many cases, it can take away the problem of Ribbis. We've got a couple of minutes left. Has anyone got any questions?
The question not directly necessarily on the content covered, but when in kind of modern business, we're not handing around coins and physical money, so we're not dealing with Gufo Moment in the same way that it might have been. Does that sometimes reduce the level of the issue of Ribbis? Because it's all kind of virtual money that no one's really seeing or handling, or does it not really make much of a difference?
No, it doesn't really make much difference. A halva doesn't actually have to even be money. It can be, I'm giving you something which you're then replacing. So in theory, even if I'm giving you a debt to the bank, which you're then replacing, that's also a problem. So we don't pass them that would take away the problem of Ribbis, and we treat it the same as if it be cash.
Okay, thank you.
Any other questions?
Yes, good evening, Dayan.
Good evening.
I was just, good evening.
Yeah. Hello?
John, we've lost you. Okay.
Okay.
Maybe we've lost
Anyone else? Okay. Then I guess we'll call it evening. Thank you for listening, and I hope that was all clear.
Yeah.
Carl,
yeah, thank you very much, Dayan Posen.
Conceptual question.
Sorry, go on.
I think that was a catch up on John's question, but John, are you there? You're on mute if you are.
Yeah, I'm here. Is it better now?
Yeah.
Yes.
So this is more of a conceptual one, but in Israel, if one were to deal with a big Israeli corporation, would the corporation, or if I were to be an investor, would the risk that you mentioned earlier, that there has to be a real risk, does this have to be personal to me, or would in a halachic process would it be able to say, well, there's macroeconomic risk, or there is something like interest rates or a natural disaster, chas v'shalom, or does the risk that you alluded to earlier, does it have to be personal?
No, the risk isn't personal. The risk is that things can change and the investment might not go to plan, right? So, for example, like I mentioned, if the tenants aren't there, if a loan to value changes and the bank's chas v'shalom repossess, if it's untenanted for a month or two and therefore you're not making the rent, it's where the investment might lose or might not generate the profits. I'll just finish because you mentioned that point. A number of years ago, there was a famous case where a person went to his bank and the bank were calling in interest charges, a bank in Israel, and the bank was calling in interest charges, and the person turns around and said that I didn't make any return on the money I borrowed, right? And therefore, I'm prepared to make a shvur to swear to that effect. And in the Heter Iska of the bank, it says that as far as return, not as far as capital you have to provide witnesses, which will be very hard. But as far as the shvur is concerned, the profits, you're entitled to make a shvur. Again, I'm saying this in the context I'm saying this. I'm deemed as one of the experts in Europe in this area, and I've never come across someone who's made a shvur. Right? It doesn't happen, but it could happen, and it has to be that it could happen, right? And this gentleman turned around to the bank and said, "I'm prepared to make a shvur that I didn't make any return." And the manager of the bank said, "What are you talking about?" So he said, "Yeah, well, you've got a Heter Iska." And the manager of that local branch turns around and said, "Oh, don't be silly. That's just something we have to keep the Haredim happy. It's not real. It's got no validity. It's meaningless." Now, in Eretz Yisrael, they know how to deal with these situations. The next thing you knew, the streets were full of signposts saying you can't have your money in this bank because the Hete Iska there has got no validity whatsoever. It doesn't really work. There was a massive pull on all the money which anyone observant had in the banks, not only the Haredim, anyone had money in the banks. And the CEO of the bank had to turn out and say, sorry, I apologize, that bank manager didn't know what he's talking about. Of course it's a valid Hete Iska, and in theory, if a person wants to make a shua in order not to have to pay the interest charge, there's nothing we can do about it. Right? So that was a very famous test case, so to speak. Not they went to court, but it went to the court of humanity, so to speak. And yeah, that was the situation there. Some of the utility companies in Eretz Yisrael do not have Hete Iskas, and this can be a challenge if a person's late paying their bills and they get charged interest. That can create all sorts of interesting shaylas. Of course, the people asking the shaylas are the ones who are late paying their bills and don't want to pay the penalties. But that's a separate discussion. Thank you for listening.
Thank you very much, Dayan Posen,
No problem.
for your interesting share this evening. Please God, next week, Rabbi Schiff will be giving his share on a topic related to 3 weeks. Thank you very much, Dr. Posen.